Hello everyone, it is Evan from the Trade Risk here on Friday, January 22nd with a weekend market recap video. In this video, we're going to spend time just going over the market environment. We're going to look at the S&P 500, we're going to look at the Russell, and we're going to look at the Qs. We're going to dissect what went on this week, discuss where we should look at heading into next week, and just see if we can make some overall sense from these markets. So jumping into the S&P 500, the big news today or this week was that we finally had a green closing week. We finally closed up and we reversed after being down north of, I believe, 4% at the lows here on Wednesday. We ended up closing on the highs of the week up almost 1.5% in the S&P 500. So very big sigh of relief for the market to finally have caught its breath. So let's take a look at the big picture first here. You can see I've cleaned up this chart. Just very simply two lines that we should be looking at here for going forward for the big picture. 1835, this rough area here, it's not an exact level, but this general area, this is the support, this is the area we want to see hold going forward. And on the upside, of course, was the highs from last year in 2015. This was up at 21.25 in the cash market. So that is your very broad overall range that you could consider this market in right now. If you look at the S&P 500, the SPY ETF, let's take a look at this chart here. You can see with this week, with the tail that we put in for this week, we did undercut and retest the 2015 August lows right here, right around 182. We retested and took out the lows here from 2014 in October, and then a little bit of this retracement here back in April of 2014. We undercut all of them and then rallied higher for this week. So that is the constructive part. Now, many people are asking, is this the bottom? Is the bottom in? Now, of course, there's no way to know that. I can't tell you that the bottom's in, but we can look at a few things here. For the volume sort of aficionados out there, I'm not really one of them, but I can tell you that with Wednesday's reversal candle here, the volume wasn't probably as high as many would have liked to see. In fact, the volume was higher on Friday, January 15th, on this day here, which was a little mini reversal, if you will. The volume was higher there than it was on this big day here on Wednesday. So that maybe is a bit concerning to some. We really want to see these reversals take place on extremely high volume days. Take a look, for example, back in 2015 on August 24th. Look at the volume that came in here today. 3 times the 50-day moving average or so, 4 times the 50-day moving average worth of volume on that day. And you can see we just about doubled the 50-day moving average on Wednesday. So perhaps that means we need to get back down there. We need a better flush. Maybe we are going to retest and flush yet again below Wednesday's lows in the coming weeks. Of course, again, it's just speculation, but it's something to think about as we move forward, to think that is the bottom in. Now, again, the placement, everything else I think was perfect. The way we undercut all of the previous lows, that's the constructive sign. Now, if we want to start to measure the bounce here, so people now are going to think and discuss, does this rally, does this bounce have legs to it? So very simply here, what I've put on the chart now is the Fibonacci retracement. Let me pull out the volume here, and I think this is the way we should be measuring this current bounce that we're experiencing right now. So I took the swing low from back where this fall started back on December 31st, so at 207.50. I believe that's the swing here that we want to measure. Some people may want to measure from the very top here. Certainly you can do that. But if I measure from that, the way this rally started up here, this previous swing high pivot, all the way down to Wednesday's lows, this is the retracement we see on the side here. And there's a few things to take note. So first, while we're bouncing here, the more the better. The bigger we can retrace, the more constructive it is that the bulls perhaps do have, at least some skin in the game here, that they're interested in this market if they can continue the rally and sustain a meaningful bounce. On the other side, if we only, retrace 38% of this leg down and then we start to head back lower and retest these lows, it's going to suggest that we're pretty weak still going forward. So right now you can see where we are, where we closed on Friday. We're just about to come in to this 38.2% retracement. So we're still at a very small retracement overall. Now, if we go down to a 15-minute chart here, I think it gets interesting when you start to look at where these levels come in at. The 38.2 we can see here, it's coming at a pretty interesting level. There's prior resistance in here, prior supply, but really it's the 50% that I want to talk about here. And look where this 50% comes in at. It's right around 194.50, and this, in my opinion, is the big level that we're going to have to face, or that we would like to see the bulls face in the coming week or so. This is where there was a decent amount of supply that traded throughout the 7th through the 12th, 13th of January, and you can expect that there's very likely, there is clearly some overhead supply there. You'd expect sellers to be pretty aggressive there if the market got back up there. So that coincides with the 50% retracement of this recent down leg here in January. So I think that's going to be a very important level. And then if you take it back up to the 61.8, this is considered the golden ratio. And that level, again, coincides with some pretty strong technical levels from the price action. That comes in right around 198, just shy of 198. And you can see the market spent a lot of time around this level here back in September of 2015. So a lot of price memory at these big Fibonacci levels. That's what I'll be watching for heading into next week. If the rally continues, how high can we get up here? Can we retrace to the 50, the 61.8? Can we exceed that and start getting back to 200? That's sort of the clues that I'll be looking for to see how weak this market really is. Again, a shallow retracement with an immediate retest of lows, that's concerning. You get the volume argument that perhaps is a little concerning, or at least can keep that in the back of your mind. But I guess, one step at a time. We are bouncing. We closed on the highs of the week. So there's something for everyone here. It's definitely, in my opinion, means that there's going to be more volatility ahead. And, you still have these fast moving averages racing lower. We've had 3 days now of bouncing. We've sort of successfully unwound much of those extreme oversold metrics that we had. So, maybe we're slightly oversold now, but I think, the easy bounce money has just been made. And the next couple of points here, the next week is going to be a lot more dicey, should be a lot more difficult. For us, we did have some longs down here that we picked up. We sold out of basically everything today, UPRO, and we had a stock position as well. So we made some money on the bounce. We're not looking to be greedy in this type of environment, so we're mostly cash again. We did put on one other position, but not so correlated here to equity markets. So that's sort of the stance here. I think that's how we're approaching the market. If you look at the IWM, you can do the similar analysis, the same analysis here. I do have the Fibonacci's drawn. You can see we're not quite yet at the 38.2% retracement. And in fact, the major level here, the 50 certainly coincides with these multi-day highs back here from the 12th and the 11th of this year. But the 61.8%, that golden ratio, that's going to be the big one here in the Russell, because that effectively retests this breakdown area right around here, right around 108.50 or so. So that's going to be, in the future, when we can get back up there, that's going to be the big level that this market has to wrestle through to really start to recover some upside momentum. And if we look at the Qs here, very similar situation. You can see we're at the 38.2, just like we were in the SPY. The 50 comes in right around 106, shy of 106. So there's some previous price history there for sure. Look where we grinded upon and found resistance at for a few days here just a couple of weeks ago. And then the 61.8, again, closer to this breakdown area up here, right around 108 in the Qs. So certainly dig deeper on all those retracement levels. Spent most of the time just going through the SPY. So I hope that helps. Hopefully you've been trading well out there and avoiding some of the carnage and whipsaw. Again, if you are interested in a swing trading service, takes advantage of both up and down markets, come check us out, thetraderist.com/premium. Thank you for watching. I will catch you guys next time.